Welcome traders, investors and clients to our Blackbook series of videos where we educate you on the technical and fundamental aspects of the markets that are most important to our traders. Now let's get to the markets. First, let's look at the gold market. Gold has continued to struggle in the mid-1600s. Last week, we saw the gold market go as high as the 1680s and then ease off into the end of the week. We're still holding up above our support zones, mainly between 1624 and 1620. Now let's look at the silver market. Again, just like gold, last week we saw a midweek bounce in silver that took it to the mid-32s and then it eased off into the end of the week. Just like in our previous updates, silver continues to hold up above its support zone in the low 31s, mainly 31.25. And now a quick update on the 200-day moving averages for both the gold and the silver market. As of the making of this video, for gold it's around $16.98 and for silver it's around $34.19. And as we have continued to stress in our updates, a settlement above their respective 200-day moving averages could lead to a sustained rally in both these markets. At this point, I'd like to take a little bit of time and explain an interesting technical aspect that's showing up in both the gold and the silver market, more so in gold than in silver. If you were to look at a daily chart in gold, you're seeing an inverted head and shoulders pattern come in. What do I mean by that? An inverted head and shoulders simply means that you have three lows and the middle low is the lowest number, and you're having a left shoulder, a head and a right shoulder. And if the gold market continues to build a strong base at this point, and if it can have a settlement above the neckline of the head and shoulders, you could see some large price movements. Another thing that I'd like to mention here is on the downside, in order for us to keep the integrity of the head and shoulders pattern intact, we would like to see gold trade above 1600, which also coincides with the long-term trend support for the gold market. Now let's shift gears and look at the fundamental side of the markets. First, the India situation. There were two major developments. The first development is that the Indian jewelers who were on strike protesting against an import duty hike and also a levy on excise duty on unbranded jewelry finally called off their strike this Saturday after 3 weeks of protesting. What's interesting is that they called off the strike just as the wedding season is peaking in India. Next, we had the Indian Central Bank cut interest rates by 50 basis points. This is a very important development since this is the first rate cut in 3 years by a major world economy. Also, we're hearing now that the Royal Bank of Australia is thinking of cutting interest rates. Does this mean that the major world economies are thinking that the global economy is slowing down? And are they preparing on introducing some inflation-inducing steps? This is definitely worth reflecting on. The other major fundamental news is Spain. This brings the entire European Union debt crisis right back onto the forefront of the fundamental side. What do I mean by that? It seems like Spain will struggle to meet its economic growth and balanced budget targets. This is definitely not what the European leaders and the IMF want to hear right now about Spain. Again, there's a lot of apprehension going into tomorrow's 10-year bond auction for Spain. And keep this in mind, the panic really sets in across the pond when bond yields climb above 6%. Now, let's get to the bullionite moment. So what would a bullionite do? A bullionite needs to understand the concept of the flow of money in the financial and trading world. What do I mean by that? In the trading world, money is never passive, but it's always active. Meaning, when a sector gets heated up or has run up a large amount without any major reversals, the professional and the smart money moves out of that sector and into a sector that they consider as undervalued. Right now, the US stock market has consistently run up since its lows in late October. We believe that this market has a little bit more upside and it may have a major top by mid-May, and then you could witness a major multi-month correction. So a bullionite, if he or she is invested in the stock market, should now become cautious and then begin to take profit and then move out when the major market correction begins. And then a bullionite will research and look at markets that have taken quite a significant correction in the last few months and seem undervalued. Don't get caught up with a skewed emotion and consumer sentiment. If you have any questions or thoughts about the markets and information that I have shared, please don't hesitate to contact us.